Hello, chart watchers, and welcome to this Thursday, June 13th, 2019 Market Watchers live show with your host, Erin Swenlin, and guest co-host, Mary Ellen McGonigal. For those of you joining us for the first time, welcome to the show, and for our regulars, of course, welcome back. Let's go ahead and we'll take a quick peek at what's going on in the market before we get things started here. All right, Dow Jones, I'm going to make sure we got the most up-to-date info. The Dow Jones is up currently almost 54 points. The S&P is up about 0.5% currently. Oh, I'm sorry, 1/3%. The NASDAQ is up 0.5% today after gapping up. The NYSE is also up right now, 0.18%. Russell 2000 having a nice day. Big move on the upside to begin the day, pulled back slightly, but now trading near its intraday highs. It is currently up 0.81%. The Canadian market's also riding higher. Currently, the TSX is up over 18 points. TNX yields are moving lower, reading 2.105%. The VIX, as you can see, is hovering just under 16, currently reading 1584. UUP is up 3 cents, 26.18. Gold, GLD, the ETF, is rising nicely, currently up 57 cents. USO is finally having a decent day. We had a nice big gap up, but it is pulling back from those intraday highs. TLT making a move outside of the consolidation zone that we've been watching for the last 3 days. All right, so let's go ahead and move on, and I'm going to bring in my guest co-host, Mary Ellen. So great to have you back today. I always miss Tom, but you're definitely a great replacement. So,
oh, wonderful.
Yes. What are you thinking of the markets right now? Oh, my goodness.
Yeah, we're in a bit of a period here digesting last week's. We had that biggest week for the year, and the markets really exploded. So this week, a little bit more tempered, and thankfully so, because those reactionary headline type big moves are a bit unnerving.
Right.
To say the least.
All right. Yeah. We have a special guest that we have been very much looking forward to with bated breath. John Murphy is here with us this morning, afternoon, for those of you on the East Coast. How is everything going on in that East Coast? Getting good weather right now, John?
Well, actually, I'm in New Jersey. It's not a bad day. It's a little chilly, a little rainy, but we're having a very nice spring up here, so things are good.
Excellent. I think we might actually be out of triple digits today, Mary Ellen.
Yeah, finally, a little cooling streak.
Exactly. All right, well, what do we got coming up? I know today is going to be a great day, but we do have Chip Anderson giving us a demo of the advanced charting platform tomorrow. Danielle Shea will be in with us. She is our options guru. She'll be with us next Tuesday. Greg Harmon will be here with us Wednesday. Mr. RRG, Julius DeKempener, will be with us on Thursday, the 20th. And then the following week, Mary Ellen and I are going to do a roundtable on pop culture stocks. So you'll want to tune in for that one. Today, we're going to start right off with the market message. John Murphy's going to start us off in the show. We will do technical news and headlines following that, but then we will have our 10 and 10. First symbol is going to be Pfizer. Talking technically today is Tom. Support and resistance and momentum sleepers will be our final segment. Mary Ellen and I had a great time picking some of those out. But let's go ahead, bring John back in, and we are really excited to hear from you, like I said, John. And I know we're going to be looking at your latest market message. So I'm going to bring that right up right now.
Thank you, Erin and Mary Ellen. Good afternoon, everybody. A lot of people have been focusing on gold lately on our site, so maybe that's a warning signal. I don't know. But I thought I'd come back. I do keep an eye on gold, and I do think this is an exciting time for it. But what I wanted to talk about today, aside from maybe some of the technicals in gold, I wanted to focus on the intermarket aspects of it. Because gold, gold is a store of value, but it really doesn't have any fundamentals to it. It's hard to tell what it's worth. I think more than any other market, gold is influenced by other markets. So I want to focus on that today. We're going to start with the dollar. Probably one of the best known intermarket relationships is the relationship between the dollar and gold. Since gold is priced in dollars, generally speaking, they trend in opposite directions. So this chart one here, let me just explain what it is. It's a very simple chart. The brown bars there, that's simply the price of gold. I'm using bullion here. This is the cash value of gold, and these are monthly bars. And the green bars that you see there, that is the dollar index. It's the cash index. And obviously, what jumps out at you is that they generally move in the opposite direction, and that's really the whole point of this chart. And just to give you a couple of examples of that, to the left of the chart, if you go back to say 2011, you notice that began a nice uptrend in the price of gold, the dollar, which lasted for 4 or 5 years. And notice that coincided exactly with the downturn in the gold market. That is normally what happens when you get a strong dollar. The price of gold normally weakens, and that's exactly what happened. If you move a little bit further forward to, let's say, to the end of 2015, you'll notice that we had a little rally in the dollar there. Gold pulled back a little bit. Gold actually hit bottom at the end of 2015 and had a very strong 2016. We had a little pullback in the dollar. The dollar actually rallied until the end of 2016. If you can see that last bar up there, the end of 2016. And that's really when, in my opinion, the dollar started to peak. We had a very weak 2017. Notice a drop in the dollar during 2017. Notice we had a little rebound in the gold market. The dollar rallied during 2018. Gold pulled back a little bit. That arrow to that green arrow to the upper right there simply shows that this latest rally in the dollar that started last year, didn't quite reach the highs of 2017. So this is the first sign that this uptrend in the dollar may be fading a little bit. Of course, this is a long-term chart, but other writers have shown, if you look at a daily chart of the dollar index over the last month or so, it has started to weaken. It's trading at the lowest level, something like 4 to 6 months. So if the dollar is peaking here and is starting to weaken, that would be a positive sign for the gold market. In fact, of all the intermarket relationships that we all write about, the most consistent and the most easily understood is the dollar and gold. So if the dollar does start to weaken from here, that would be good for gold. Now, if you look at the gold chart itself, those are price bars. You can see that the price of gold, as I mentioned, it bottomed in 2016. It's been basically moving sideways since then in what looks to me like a major bottoming pattern. I simply draw a trend line over the highs of the last, whatever that is, 5 years, starting in 2014. To put a name on that, I think that's a neckline. I think this is sort of, I hate to put names on patterns, but sort of like a complex head and shoulders pattern, if you want to call it that. But it looks to me like the market is trying to bottom. We've had a pattern of rising troughs over the last 3 or 4 years. But every time we've touched that neckline, we've backed off. I think we're getting very, very close to the point where I think we may be getting close to an upside breakout. I don't know what, we are in the process of testing that line right now. As you can see, we've actually touched that line. So we're watching this very, very closely. And as I mentioned, there are a lot of intermarket factors working in the favor of gold. And we've already talked about the dollar. Now, one of the things that's influencing the dollar is the direction of interest rates. And that interest rates also have a tremendous impact on the direction of gold. This maybe isn't as well known as far as intermarket factors are concerned, but it is something that I watch very closely. So, Erin, if we can go to chart 2, we can see here what we're doing here is we're comparing gold to the direction of the 10-year Treasury yield. And the basic rule is still the same. They generally trend in opposite directions. Again, these are monthly bars also. And again, we'll start at the left side of the chart in 2007. You can see we had a sharp downturn in bond yields. Gold rallied very sharply. Now, 2007, there were a lot of other things going on. even though we're looking at these one at a time. The reason the bond yields fell so sharply during 2007 was because stocks fell very sharply, and we had a huge flight to safety into treasury bonds. So that pushed treasury yields sharply lower. Also, the dollar fell very sharply during 2007. So there were other things going on, but still, you can see that a sharp drop in yields boosted gold. Now, bear in mind, one of the reasons gold is so interest rate sensitive is because it's a non-yielding asset. Gold does not pay any interest. If you own gold, you get no interest on it, and you don't get any dividends from the price of gold. So it's a totally non-yielding asset. As a result, when yields are rising, gold falls out of favor. There's no reason to buy gold if you're looking for yield. If you can get yield in other markets, if rates are rising and you can get higher yields here, there's no reason to buy gold. When rates are falling, however, and the yield is very low, this greatly increases the interest in gold, and that's why that is. So we saw that sharp drop in bond yields, 2007. Gold, and then for the next 5 years, until about 2012, you could see almost a perfect inverse relationship between the two. It's very obvious. Now, if you go to 2012, that green up arrow, that bond yield started to bottom. 2012 had a nice rally, 213. If you look at the upper part of the chart, that's exactly when gold peaked. So it's very clear, once again, when rates are rising, that diminishes the appeal of gold, and gold has been falling since then. Now, over the last, since about 214, you'll notice they've been basically moving sideways in opposite directions, but basically moving sideways. Every time bonds have dropped, for example, 215 there, I have a green arrow, green down arrow. Notice we had a drop in yields. We had a little bounce in gold. Then we had a little rally in yields from 2018, a little pullback. So they're moving in opposite directions, but in a trading range. But that circle to the right there, I think that's something that's really what's driving it now. Remember, this is a 10-year yield, has fallen very sharply. In fact, it has really shocked most of us how sharply bond yields have fallen. The 10-year yield has fallen to the lowest level in 20 months since, I think, September of 2017. And part of the reason for that, of course, is some signs of economic weakness, tariff problems, but also expectations for maybe a Fed rate cut. But bond yields are dropping, and normally, and you can say it's not as dramatic, but if you look at the brown bars, you'll notice that since the peak in bond yields at the end of last year, gold has been moving up. Not a lot, but it is starting to move up a bit. So if rates continue low, and if I would suspect if the Fed does lower rates either 1 or 2 times this year, I think that would increase the appeal toward gold. And by the way, if the Fed does lower interest rates this year, that should weaken the dollar. So gold will get a benefit from not just falling bond yields, but also, I think, from a falling dollar. We have the highest rates in the world among developed countries. We're the only one that really has any room to ease. In Europe, most rates are negative. In Japan, they're negative. They really don't have much room to ease. We are the only central bank. We're over 2%. We have a little room to ease, and I think that those expectations are one of the factors that are driving the dollar lower, yields lower, and I think should start driving more money into the gold market. So far we've talked about the dollar, we've talked about interest rates, and of course they're linked. But there's a third element that impacts the direction of Erin, you're right ahead of me there. There you go. Gold versus the stock market. There it is. Gold is very much impacted by the stock market. So I went back just to demonstrate this. I wanted to go back, show a little history, because you can actually see this. This chart here is it's a very simple chart. The black bars there, normally when we compare gold to the stock market, most people use the Dow. It's just a sort of a tradition, so I'm kind of sticking to that. The black bars these are monthly bars. That is a Dow Jones Industrial Average. This is a log scale, by the way. I did that because it shows up a little better. Going back to 1990. I could have gone back to 1980 and show the same thing, but it's just too much data. And the basic point, and the brown line there is a ratio of the gold market divided by the Dow Industrials. So obviously it tells us what gold is doing relative to the stock market. And you can see the basic rule of thumb is that they trend in opposite directions. If you look to the left of the chart, let's say between 1990 and 2000, we had a very strong stock market, as you know. In fact, it was up almost 10 years in a row. During that period of time, gold underperformed stocks by a wide margin, and that's the falling ratio. It was very, very obvious. What really started to change was during 2000 and 2001. If you remember back, that's when the stock market peaked. We had the dot-com bubble bursting, and stock market went into a bear market from 2000 to the end of 2002. If you look at to the bottom of the chart, that was the exact point where gold started to come back into favor, and that's normally what happens when stocks are doing well. There's no interest in gold. When stocks start to stumble or go into a bear market or people start to get nervous, they start looking for safe havens, and gold is one of the top choices. So you'll notice, in fact, stocks traded sideways. It's not as obvious on this chart. The S&P probably would have been a better choice. But anyway, the stock market traded sideways for almost 10 years, from the beginning of 2000, let's say, to the beginning of 2000, actually to almost 2010. And that has been referred to as a lost decade. It qualifies as a secular bear market. Stocks traded sideways for almost 10 years, with two very big bear markets in there. The big one, of course, being 2007, 2008. During that entire decade of weak stock prices, look at that gold Dow ratio. Gold was the place to be during those 10 years. Gold outperformed stocks by a very, very wide margin. Now, interestingly, gold stocks turned up. That black arrow there, I just wanted to point out that gold stocks did turn up in 2009, but you notice gold did not peak until 2011. That's the brown arrow there. I just wanted to explain. Normally, you would expect stocks of gold to turn down right away. There were two reasons why gold was a little behind stocks there. One was that we had a plunge in the U.S. dollar during 2010 and 2011, so that supported gold prices. But also, even during 2009, 2010, while the stock market was rallying, there was still some debate as to whether this was the beginning of a major new up leg, or if it was just a continuation of the decade-long sideways trend. It wasn't until 2013, and I don't have it marked off there, but Erin has the thing right on it. 2013, stocks hit a record high. That took place in 2013, and that was when the gold market really started to tumble. So again, a new high, secular bull market starting in stocks, gold underperforming. And as you can see, that ratio, stocks have done very well since then. And as you can see, the ratio was falling. So between 2011 and 2018, there was just no reason to be in the gold market. Now, that's history, and I just wanted to establish that this inverse relationship goes back. I could go back to the 1940s and show this to you, but I think this just establishes the point that what the stock market does influences the price of gold. Now, let's focus in on the last year, and this is when it starts to get a little more interesting. This chart here is the chart along the bottom there is, there you go. That is, I'm just comparing gold to the Dow Industrials over the last year. Okay, and it's a very simple chart. The brown bars there, we're looking at the lower box there. The brown bars are simply as a daily chart, I believe. Yes, it's just the price of gold, bullion, and the gray area there represents the Dow Industrials. And the point of this chart is that every time stocks have stumbled, money has flowed into gold. And that first black arrow there, you can see last October when the stock market started rolling over and had a terrible fourth quarter. That's when gold turned up, which is normally what happens. Then, in fact, if you look to the upper chart, the upper box there, again, the gold Dow ratio, you can see it bottomed in October. It rallied all throughout the fourth quarter as money coming out of stocks. A lot of it went into bonds, but some of it went into gold. Now, the ratio peaked. This is all as it should be. The ratio peaked in January. You can see that the brown arrow there on the top, and has been basically falling. Yeah, there you go, Erin. The arrow there peaked, which meant that in the beginning of this year, as the market rallied again, the gold stock ratio started falling. There you go. Now, gold didn't actually peak until February. I'm not quite sure why it was a month late, but anyway, you can see that it rallied. But from February until, let's say, about a month ago, gold was very much out of favor. Gold stocks were very strong. Stocks, in fact, some of them were hitting new highs. The Dow didn't quite reach a new high, but very, very close. But it was only over the last month, about a month ago, a little over a month ago, when trade tensions started to escalate, as you all remember, with China and then Mexico. Stocks had a very bad month of May. That green arrow, the black arrow there, you can see. And once again, and so we had a very bad month of May, and a lot of people were concerned. But look at that gold, right on cue, gold just turned right up. And you can see the price, the brown bars there, the price of gold has rallied right up to its February high. Now that's a very, very, and as you can see, the gold ratio also. But that's a very, very important test. Bear in mind that we are up against major resistance, that major long-term neckline. This is a very, very important test. So we'll have to see what happens from here. But the only point I wanted to establish here is that aside from the dollar, in addition to the dollar, in addition to interest rates, what the stock market does is has a major influence on the direction of gold prices. And every time the stock market sells off, money flows into gold. Okay, so that's that. And I just want, that's important. So those are the three main things that I look at. And bear in mind, it's just before we leave this chart, I just want to say this, that we are in the 10th year of this bull market. No bull market in history has ever lasted this long. I don't want to sound too fundamental here, but we have to know about these things. There are signs of weakness in the global economy. Europe is weak, Japan is weak, China is weakening. Which is one of the reasons interest rates are so weak. And we are, as I mentioned, the oldest bull market in history. There are potential trade wars. So if you look at what's going on within the market over the last 6 months, we've seen money flowing into safe havens. Gold is a good example. In currencies, the Japanese yen has been very strong. In fact, there's a historical correlation between the yen and gold. And yen, in fact, has been one of the strongest currencies in the world over the last several months. So we're seeing money flowing in there, the Swiss franc. In the U.S. market, we're seeing people buying treasury bonds. Normally, another way of saying interest rates are negatively correlated to gold is that gold and bonds generally trend in the same direction. But also we're seeing money flowing into consumer staples, utilities, REITs, defensive groups. I suspect that investors are not turning negative at this point, but they are starting to hedge their bets about a very old bull market, signs of weakening. They're not abandoning the stock market, but I think they are taking out a lot of defensive protection, moving into defensive sectors of the market. They're moving into bonds, treasury bonds in particular. But gold is certainly one of the markets that they are moving into. Not just gold, but gold stocks also doing quite well. So having said that, let's move down to our last chart, which is gold may be nearing upside breakout. Now this was written yesterday, yesterday late morning, I think. When I'm looking at what gold is doing during the course of the day, you can't look at bullion itself because that's a day old. I use GLD, which is the Gold Share Spider, which is an ETF based on the price of gold. It looks exactly like gold. It's just that if you're trading very short term, this is really what you have to look at. And all I'm showing here is since the beginning of 2018, and the headline is right there, Gold Spider may be nearing upside breakout. You can see, by the way, that thing turned up August, October, actually really in October during the fourth quarter when the stock sold off. We rallied into February. And by the way, notice that blue circle there, that is the golden cross, appropriately named in this case. The 50-day moving average, the blue line, went above the 200-day. That's normally a very bullish sign for chartists. The 50-day remains well above the 200-day. They're both rising, and the GLD remains well above it. So moving average trends. Now that line that I have drawn in there, is just to show that not only are we testing the highs that were set earlier this year, but we're very close to challenge. This line can be drawn in different ways, but I just wanted to make the case that in chart 1 we showed a neckline going back about 5 or 6 years. So we are also in the vicinity of testing that. So those of us who follow charts know that if we were to get a decisive, and I mean a decisive move well above that February high, that would be a very bullish sign for the price of gold. I'm not predicting it's going to happen, although I suspect it will sometime if not this week or next month. I suspect sometime maybe before this year is out, we're going to see this happen. We're at that point we're in a very mature economic cycle, which is starting to slow. This is that time when people start moving their money into gold. So I just wanted to point that out. And I'm also in the process of writing an article, which I'm going to probably publish later this afternoon, which I just want to mention that. I'm also writing an article on gold stocks, the gold mining index, which is GDX. And the reason I'm showing that is that there's a fourth element to this intermarket in addition to the three that we've already talked about, and that is the relationship between gold mining stocks and the commodity itself. Now, for obvious reasons, they do trend in the same direction. I mean, that much is obvious. And gold mining stocks have also been rallying quite sharply over the last month. I don't have a chart to show you, but I'll have one on there by this afternoon. And so if we do get a breakout in gold, we would want to see gold mining stocks break out as well. You obviously, if we were to go into an uptrend here, and I'm still hedging, I think it's going to happen, but it hasn't happened yet. We would want to see both break out to the upside, but there's just a little bit more to it. That one of the things I will show later today is that gold mining stocks have actually been rising faster than the commodity. In fact, that has been the case since last autumn. And historically, gold stocks are more leveraged than the commodity. When gold is weak, gold stocks underperform. One of the bullish signs for gold is when gold miners actually start to rise faster. It seems a little counterintuitive, but gold stocks, the point is that gold stocks generally do better than the commodity when gold is maybe in the early stages of an uptrend, and we are beginning to see that. So, but I'll hold off on that until later this afternoon. But that's something else to look at. So I know a lot of other analysts have been writing about it, and I agree with everything I've been looking at. It looks like it's time for gold to do better. But the point that I wanted to make today was that there are a lot of other intermarket influences that are affecting gold as well. So,
excellent.
Gold is a big story. So, Erin, that's all I have, and I'll turn it back to you.
All right. Well, we have questions, of course. One of the ones, and we actually sort of touched on this one before the show, is, what are your thoughts on gold versus, the other metals like silver? Do they react the same as gold to the market? I mean,
no, well, at the moment they're not, Erin. And this is you would think that commodities would trend in the same direction, and they normally do, but in this case they're not for different reasons. Silver, for example, has been rising a little bit, but not as much as gold. Silver is there you go. Did you have this planned, Erin?
Of course.
I'm very impressed. You can see that silver looks like it's basing also, but not nearly as well. Silver is about half precious metal and half industrial metal. So the industrial metal portion of it is boosting it a little bit. But as you know, industrial metals have done very badly of late. Copper is down like 10%. That whole industrial complex, aluminum prices, steel, whatever, and they're all tied to China and tariffs and all this kind of stuff. So industrial metals are not doing well. And silver, and so at this particular point, that's one of the fact that they're not doing well hinted economic slowing, which is one of the reasons that money is flowing into gold. So at this particular point, gold should do a lot better than the other metals.
Okay, excellent. And I guess one of the other things, I know, Mary Ellen, you'd asked this before the program as well, was, do you own physical gold, and how do you feel about owning physical gold?
Well, you mean buy the bars?
Yes, yes.
I wouldn't know where to put them, to be honest with you. My apartment isn't big enough. My house isn't big enough for gold. No, I know people do that, and I have no opinion on that. I just think it's so much easier to click on the computer and buy some shares of a gold stock or a gold index or whatever, and just put it in the bank, as opposed to buying the bars themselves. But I know some people like to do it. Maybe they like the security of counting their gold bars at nighttime. I don't know. I'm not criticizing that. But to me, no, I just think. And by the way, I really don't look at individual gold shares much anymore. I do look at Newmont. Was it Newmont Gold Corp now? What is it?
Yeah, I think so.
Yeah, yeah. Because that's in the Newmont Gold. Yeah, I got it right. Only because that's in the it's in the S&P 500. In fact, I pointed out a couple of weeks ago that it was the strongest stock in the S&P. Yeah, here you go. This is one of the biggest stocks of the gold stocks. And I just said I don't look at individual stocks, but here we go. You can see that. Well, you forced me into this, Erin.
That's right.
This stock is right. It actually looks just like the price of gold, and as you can see, it's right up against its highs, right around 35. It's right there. So this is, and by the way, basic materials have been quite strong over the last month. The strongest part of that are gold stocks. I don't know if people are aware of that, but so money is pouring into this particular stock. It's in the S&P 500. It may be the biggest stock in the gold group, but as you can see, it's very, very close to an upside breakout. And obviously, and by the way, if you look at that last line from May, that big jump, I just pointed out that when gold is looking better, the gold stocks usually rise faster. That's a perfect example of it. I would suspect that has gone up fast. In fact, I know it has. It's gone up faster than the price of gold. So if you were to get a breakout here in Newmont, now it looks like we're pretty close. That would be a very good sign for the stock. Obviously, it would be a good sign for the gold mining group. It'd be a very good sign for the gold market. So sometimes it does pay to look at individual stocks, especially big ones like this. But everywhere we look, and notice the moving average lines are in bullish mode. So the stars seem to be aligning up in favor of gold at this point.
Excellent. So one of the other questions, and I'm going to pull up a chart just because it probably makes sense to, is do you ever look at GDX versus the junior gold miners, GDXJ?
Not really. Not really. Versus the junior gold miners.
Mm-hmm.
Actually, I'm a little surprised at this chart. I would thought that it would have been I would have thought that. I always think of I don't look at them that much, but I have in the past. I always think of the junior gold miners as being a little more speculative, mm-hmm. like small cap stocks. And they always, in my view, they always seem to lead on the upside and lead on the downside. So I would have guessed, I shouldn't say this, but I should have guessed that the junior ones would have been doing better, but obviously I'm wrong. So in this case, the big ones are doing better. But no, I don't pay much attention to the junior ones. I kind of stick with the big stocks.
All right, excellent. Let's see, I'm just checking on some of our other questions. So, I mean, we did talk a little bit about silver. Do you see a way for silver to, start outperforming? I mean, how does it catch up to gold?
I don't think so. It would take a lot of good. Like silver probably wouldn't start outperforming until copper starts. By the way, Erin, as long as you have that chart, could you put up the GDX versus GLD? As long as you have it right there.
Of course.
This is one of the charts I'm going to be showing later today, so I'll give you a heads up. This is the GDX, which is the gold mining index, versus the price of gold. Notice last September, gold stocks started doing better. Bear in mind, the rule of thumb is that when gold is strong, they both rise together, but the gold miners do better. So this ratio should be rising. And you notice that's exactly what happened. Then we pulled back. But since the beginning of May, when all the trade problems with China and Mexico and everything else, notice they both, gold has done well. We've already looked at the gold spider. But notice that ratio is rising. That's telling us that over the last month, they're both rising, but gold stocks are rising faster than the price of gold. This is what we should be seeing if the price of gold is starting to move higher. So that's a very, very nice chart, and it kind of fits into what we're already talking about. So this is, now we want to see some upside breakouts here, obviously, but again, this is again the fourth factor, the fact that gold mining stocks are starting to outperform the commodity is another positive sign for gold.
Very good.
Thank you so much for coming on the program. It's such a treat, and we're going to have to wrap it up and move along. But I guess I could let the cat out of the bag that we will be seeing you on Market Watchers Live once a month.
That's the rumor.
All right. So everybody,
I look forward to seeing you guys next month.
Yes, it'll be great. And I know Tom will be happy to not have missed you.
Well, I don't know about Tom, but I like working with you two ladies.
Oh, well, you're just so sweet.
Erin and Mary Ellen, you guys do a great job.
Oh, well, thank you so much.
Thanks.
All right, well, let's go ahead and we're going to move on into our technical news and headlines. So I'm going to go ahead and start with the key economic reports. So we'll bring up that slide for you. All right, so here we go. At this point, we had the jobless claim numbers came out. And interestingly, they were higher than what was expected. And some of the information there is, they said that it's hit a 5-week high unemployment, but they're saying that a lot of that might have to do with California and Pennsylvania layoffs that are on the rise. We've also seen some of this has been hurt by the trade wars as well. And one of the other indexes I wanted to talk about was the import price index, because this one actually went down. The cost of imports, believe it or not, down 0.3% versus last month where it went up 0.1%. So imported goods, the cost fell. They're saying that part of that is actually coming from the tariffs, that import prices over the last 12 months have actually dropped 1.5%, and import prices were rising by 4.5% last year. So I think just some interesting economic news out there that I thought you might want to be aware of. All right, let's go ahead and move into our key earnings. There were quite a few that have reported. There is your list right there. I'm going to go ahead and look at some of these earnings that came through. There we go. I'm going to use our ACP tool for you. So first of all, well, let's go ahead and Neptune Wellness came in below expectations, 4 cents versus 2 cents. And let's pull up that chart. And we can make this a little wider for us. There we go. As you can see, the PMO has now gotten pretty much in that overbought territory. And really, I think what is important to note is this overhead resistance area. Now, this has been a stock that obviously hasn't traded for very long. So it's hard to make too many, looks at price pattern, but I could see a double bottom possibly lining up here. But I'd be a little concerned that our PMO is rather overbought right now for Neptune. And of course, on that, despite missing, they are up 0.36% right now. All right, Lululemon was actually a surprise to the upside, 74 cents earnings per share versus 0.71, 71 cents. As you can see, Lulu doing quite well. We're up 0.36% on Lululemon. And, once we burst out of that overhead resistance from 2013, it's just been nothing but good for Lululemon. Of course, we had the big drop, but that was in December. That was when everybody took a big hit. But overall, you can see it's continued on a really nice rising trend. Starting to see a little deceleration right now in that PMO. And the volume pattern, you can see a little bit here is moving downward on the rally. So that could be a little bit of a concern as far as a buying exhaustion. All right. RH was reported today. They had plus 1.85 versus $1.54. And the market liking that as well. It is up a little over 1/3% currently. And there is your overhead resistance back here. Of course, we hit a high in September. Let me grab this a little. There we go. So there was our all-time high here for RH. And since then, we've really pulled back quite a bit. This is the new short-term support level that looks to be forming. We're actually seeing a move and trading above that overhead resistance. So we could be looking at a move back up to the upside. The PMO is starting to make its way back up. All right, next up, TLRD. And then I'm going to look at two others, and then here we are. So this one was interesting. Tailored brands, you know, the apparel retailers, I know Mary Ellen would back me up here, have really been hit quite hard since really the middle of May on through. You know, we had this, and I think there was a little bit of a hint here. We had this double bottom on Tailored Brands, and then you got the confirmation, but we never even got close to the upside target, which would have been all the way up here somewhere at about $40. And we never got there and have since turned down. And now we've actually broken down below support as well. And if we take this in just a little bit, we can see that there is support that does lie lower here, and we're sitting right on it. So if we're going to get the turnaround, this is where you'd want to see it, but we're not getting it just yet. Hexo, look really quick at this one. Here we go. It's just been on a tear. It looks like we're pulling back on a rally that we've had earlier. So at this point, I'm looking for more pullback, I would say, just looking at the fact that we haven't gotten down to some of this really short-term support down at like $5. And the last one I'm going to look at is Duluth. They also reported today. They came in a negative surprise, 23 cents versus 22 cents downside. And you can see that we're now sitting right here. There's the lowest bar back here. That's where I would look at support. And we've been flirting with this and currently trying to trade. We're trading above it. This would be a really great area to see that move to the upside. We don't have enough data for the PMO, but if we look at the OBV, you can see it's been confirming this downtrend. I'd want to see the the volume reading get up to the lows we saw back here. That's all I have for the key earnings and economic reports. I'm going to pass it over to you, Mary Ellen, for,
Okay.
There you go.
Upgrades and downgrades, correct?
Yes, indeed.
All righty. So let's go ahead and take a look at some of these stocks. And not a lot of action today on the upgrade downgrade side. Feels a bit like a sleepy week overall, but let's take a look at some of these names. The first stock that I'm going to be pulling up is actually based in Brazil, the ticker symbol BRFS. And these guys, you can see this nice gap up, 6.5%. This company is a provider of meat products, pork and chicken. There was a report that came out today that their exports to China have jumped over the last month by 50%. There's been an African swine fever issue in China, so they are unable to utilize their own products. They are importing, and this particular company is one of the benefactors and beneficiaries. And we can see the RSI trending up here above that net neutral. And then the MACD is just poised for that black line to cross up through the red. That's a positive signal, as if it gets up above this net neutral zero, we could very easily reverse this near-term downtrend. Let's take a look at the next stock these are upgrades, and that's going to be one of the home building stocks, Lennar, LEN. This has been a bit of a touchy area in the broader markets because the lower interest rates are making the group compelling, but there are other outside issues that are holding some of these builders back. But Lennar is jumping up 2% today on the upgrade, and we can see that the RSI remains positive. So this is a stock that is in a confirmed uptrend, finding support at an upward trending 50-day, that red line, simple moving average, and then your MACD is positive as well. Williams-Sonoma, WSM. This is, of course, a retailer of home goods. This gap up here was on earnings. They came out with super good numbers, pulled back, digested this big gap up, and now today up 6% on the upgrade. So we've now broken out of this longer term base. So we've broken out to new near-term highs. RSI is positive, MACD is positive. It's a bit extended, but it certainly looks poised for further upside here. We can look at TDOC. This is a company that's in the medical products space, kind of struggling a bit down here, but they did get upgraded. The stock's up 2.5%. It does have more work to do as far as being in an uptrend. I'd like to see it break up above this blue 200-day simple moving average, but we can see the RSI is poised to turn positive, and then that MACD, black line up through the red, if it comes up through that net neutral, that would be constructive. But again, a break above this blue 200-day and then also a breaking out of that base would be quite constructive. Let's take a look at some of these downgrades. And the first one is going to be an energy stock. This is Marathon, and this stock really has not done well. They came out with good numbers, but the stock gapped down despite that. It is struggling very clearly in a downtrend. We see all these key simple moving averages trending downward, the RSI down below this 50, MACD below zero. So not a lot of life there. We can look at UNP. This is a rail stock. Union Pacific got downgraded today. This stock started faltering because of the horrible weather across the Midwest, and it started to try and rally, but then the Mexican tariffs hit them again. Now they are being downgraded, and we can see the stock has broken decisively below that 50-day simple moving average. RSI is negative, as is the MACD. So not very constructive there. And we can take a look at a REIT stock that was downgraded today. The ticker symbol is WELL. This is a diversified REIT, and it's really not getting hit. The stock is very much in a confirmed uptrend. This green line is your 10-day simple moving average. The stock is finding support at that upward trending 10-day simple moving average. And then the last stock that we can take a look at here is another one that's in a very confirmed uptrend. This is Euronet, a payment processing company, finding support at an upward trending 10-day simple moving average, dipping a bit here, down 1.5 on the downgrade, but it could very well be a buying opportunity. And with that, we will be right back.
Missed the live show? Want to rewatch a workshop? Tune into the StockCharts TV YouTube channel to catch up on the latest programming and content. All of our live shows, workshops, special guests, and more can be found there. Each category has its own playlist, so it's easy to locate. We even have chart school and creative strategy videos to help you become a better technical trader. Leave comments for our commentators, like your favorite videos, and don't forget to subscribe to our YouTube channel.
All right, welcome back. It is time for the 10 in 10. So we'll go ahead and get started. Mary Ellen and our producer staff have been gathering those 10 in 10 symbols. So I will go ahead and I'm going to start with Pfizer, which we picked to start off with what is going on. So I'm going to go ahead and move right on into annotating. All right. So let's first go ahead and use our trusty support resistance line. Here we go. I'll put that right about there. I'm going to match it with the top we have back here in February, because that matches up pretty nice to where we found resistance in the shorter term. And look, if you look in the very short term right there, we're starting to flirt with the bottom of this little trading range. We're getting a rounded top, and now you can see in the thumbnail especially that the PMO has turned down. So I'm, personally not interested in getting it while this PMO is moving in the wrong direction. But at the same time, I think there is some support to be had here. I would probably continue to hold, consider buying, but maybe look at it on my, add it to my watch list.
Okay, and then the next one is a sector that we took a close look at yesterday. The ticker is XLV.
All right, healthcare.
Yeah.
And I know we were talking bullishly about it, and I really like the chart for the sector right now. Let me go ahead and annotate. The first thing that really just comes out to me is this flag that's forming right now. I want to make that this color. There we go. Well, actually, that's pretty light, isn't it? Okay. Here we go. That's a little better. So anyway, there's your flagpole, and then there's the flag that's forming. At this point, what you want to see is a breakout above that $92 range. That would execute this flag, and you're looking at a pretty sizable move here. Let's see, like 6 handles, and I'm trying to remember who came on the show who talked about that. But you'd add that just to the top. That would certainly take you above these highs we saw back here in October and in December. So we'll mark that as well. All right, and that's what I got you for your healthcare. I do think this sector is looking pretty good, though.
Yeah, looking very, very constructive. The next one is in that gold space, FCX, Freeport.
All right. Yeah, we actually had talked a little bit, I think, about this one with John earlier before the show. We have the extra special treat to be able to chat with our guests for a while while we're preparing for the show, and it was definitely one of those great days. Here we go. We're sitting right on the support level for the year at this point. We've started a rally off of that. It looks great. Look at the nice buy signal we're having here. And this is a non-ferrous material, so this isn't just gold, but it should enjoy a little bit of rally. And I think John was alluding to that fact with gold, maybe not as quickly as gold, but I know silver was one he talked about. I would be looking for that move up to 1250. I really think this one has set itself up nicely. Look at the OBV here too. I think that looks especially good. Moving right on up, broke through that declining trend. So I think that's looking good. And then you can see that the scooter is starting to improve as well.
All right, and then the next one is in the semiconductor space, Applied Material, and the ticker's AMAT.
All righty. All right. Well, I know people might look and see these 2 spikes and think double top, but it's really, you want to come from the, you want to come in off a rally for a double top, and we're coming in off a decline for that. So honestly, what I am seeing, let's use our parabola tool, is an Adam and an Eve double bottom forming right now. Where is the confirmation line? There we go. Let's make that. That is right there at the middle of the W, right there. That's your confirmation line. And as you can see, we made an attempt here to break out. We didn't do that. If you want to take this and look at it in a little more of a bigger picture here, let's make that red. You could maybe look at this as the cup, and this could be your handle coming down right here. So in either case, I think that this is a bullish setup right now. The PMO is starting to turn over, but it did hit positive territory. And look at the new high coming in on volume. Right here, you've got a higher high, and that is a reverse divergence. But at the same time, when I look at this high to this top, we're really very close. And I would call this a positive here, because we do have those rising bottoms right here. Rising bottoms, and the bottoms were pretty much even. So to me, this is more of a positive divergence, cup and handle, or double bottom.
Very good. The next one, the ticker symbol is BHGE, and it's an oil-related company, Baker Hughes.
All right, makes me think of Better Homes and Gardens. Okay. Wow, look at the trading range. It looks really similar, doesn't it, to what we just looked at? And not, it's somewhat surprising.
Yeah. Yeah.
There's
higher lows.
Yep. And then you've got that trend line right here for
Actually,
the
it's a lower low on this one.
Yeah. And then you can even go with that. Like I said, if you want to look at it in a little bit bigger, you could even make the case for a cup with a handle. Isn't that cute? It looks like little eyes.
We're getting a look at your art.
Eyelids. Okay, and the OBV, you've got even tops here, even tops. So I feel like this is a confirmation. We're pulling back here, which is what you would expect to see on this pullback. Be interested to see where we do get the bottom on it. I suspect it looks like we're going to have positive volume today because we're up 1.84%. So whatever volume comes in, that will be added to the OBV. And so we're going to see a higher bottom here, and that's going to match up, and that will be a confirmation.
Right. The next one is in computer software security. The ticker is ZS, Zscaler.
Yes, I think we've looked at this one in the past, or Tom has on 10 and 10. This is a pretty interesting stock based on quite a few things here. Let's look first. The one thing that just really popped out at me, of course, is my PMO buy signal coming in right there. I think that's especially good. Coming in right now on this move, this breakout in the very short term. You can see the top we had, and today we're trading at the top of the range. Looks that way. Let's see, high and close. Let's see. Yeah, we're just under the high for the day. So that would be the real kicker, right? If we get that breakout above that top. And honestly, looking at how it is set up, I would expect to see that breakout. But with a 3.5% move to the upside, I think I might want to wait for a bit of a pullback because we've seen things continue to go straight up. That's certainly a possibility. There's that area. But I would look for the pullback. That's a really big move there. And so you want to look for a pullback, maybe down to this where we had a top, some tops back here, really the low for the day. Look for a bit of a move back down there, even if a horizon trend line. There we are.
But you are getting that nice volume on that one. So
yes, exactly.
That's good.
Midday even, and we're beating it out.
Next one is General Motors, GM.
I haven't looked at the autos. Doesn't look like they've been having too much fun here, but June is an improvement.
I'd say Ford looks better, but
okay.
That's not on the list.
Food for thought, everybody, whoever requested this. Let's see here. So that's kind of, I don't know if I'd go so far as to call that a flag. There's your island reversal, though. That's pretty much textbook, I would say, right there. And we got that reversal, that nice move to the upside. The PMO had started to turn up. The PMO is still rising. And notice the price has pulled back here. Whoops, let me go with a trend line. So notice the price has been pulling back, but the PMO has been doing nicely and it's still rising. So that's telling me there's still momentum in there. It is a V bottom, so we are getting that pullback. Where would your overhead resistance now be? Because I would be looking for that support to be hit here. Overhead resistance, it could go right here with that top back here in May, but really clearly the biggest overhead resistance is going to be at the tops that we had back here. Look at OBV still looking pretty good too. Nice.
I'd say maybe around 37.55 on the upside resistance, but I use simple moving averages.
That would make sense. Okay.
The next one's Twitter, TWTR, and this is one that we didn't catch on the downgrade, but I guess they did get downgraded today.
Oh, okay. Yes, absolutely. Look at that PMO top below the signal line. That's always You don't want to see that. That is for sure. That's especially bearish to me whenever you get those tops below the signal line. We were seeing that upside momentum. That rally failed. Look at it, failed just at, I'm going to go right here. Let's see. The rally failed even before it hit these tops back here from the May top. It didn't even make it up there before it started to fail and move down to the low side here. And look at what should have held over here as support. I mean, you got the drop back there. It tested the 200-day EMA, and it did promptly make itself back higher. But like I said, it didn't even test that overhead resistance at that level, and now it's trading below those lows from May. Next up
is Grubhub. Oh, I'm sorry. Yeah.
Oh, yeah, I'm sorry. $34 is your support level. I think it's pretty clear, too. So that's what I'd be looking for. I would not be looking to hold on to Twitter. I would not be looking to buy it right now. So there you are.
Okay, now on to the next one is GRUP.
Okay.
Looks like it might be waking up here.
Indeed. Yes, very nice. Trying to think. Nope, I didn't have this on my momentum sleepers list, but this is exactly the kind of thing
you do.
For. Look at that declining tops trend line. If you can do it from this top to the one back here, but you could even get a few more tops included if we draw it down a little bit lower. But I'm going to go ahead and leave it there because I think it tells the story of the breakout. And on top of that, you have, let's see, make this blue. There's that short-term area that was overhead resistance, but this is pretty much a double bottom. There's no arguing that, in my opinion. And given the length of the pattern, the minimum upside target would be probably around 80 or just below, which pretty much matches up with that 200-day EMA. So I would look for a move up to 80 to test that 200-day EMA. If we go to the beginning of this declining trend, that would bring you up to probably, it looks like about $88, $89. This is the minimum upside target, 80 for the pattern. That's a minimum, so it could definitely move higher, and I'd look for that.
Exciting. Mm-hmm. And then the next one is BlackBerry, ticker BB.
Okay.
Quite similar.
Alrighty. Okay, there we are, down 1.2%. So this is nice. You got the rally, it's pulling back. Look at that beautiful PMO buy signal. That's the kind of signals I like. Not only is it a buy signal, but it comes off of this really deliberate bottom on it. It took some time to take that shift, but it made the shift, and now we've got the buy signal. Let's see where our support resistance areas are in the shorter term. So right here, that was what I would have looked at as resistance. It matches up with that low and then the high back here from May. We've come out, we did fail to hold it. We didn't close above that, and we are falling back down. But look at the 50-day EMA is right there. It's set up for us to get that nice bounce, continue up. I would say the next area of overhead resistance, of course, 950. So, that's a pretty nice move of about 75 cents or more if you're getting in right now on that 50-day EMA. This PMO looks fantastic, and look at the volume coming in. It certainly makes the OBV look especially healthy. And look at the scooter. Woohoo. This one's looking pretty good. All right.
So those were some good names.
Absolutely. And there we go. There are those symbols that I just annotated. They are currently in the MarketWatchers live chart list. I just added them as I went along. So there you go. You can get to them. Just go to the articles tab, click on the MarketWatchers live blog, and there the link will be to the chart list with these charts in it. All right, well, we will be right back talking technically today. Tom, he couldn't be during the show. He couldn't be here, but we do have a talking technically segment that he did on support and resistance. So I'm going to just move right on into that.
One of the most important aspects of technical analysis is establishing and identifying price support and resistance. As a first example, let's take a look at Goldman Sachs. When you look back to the beginning of year 2018, you'll see back in February and then again in early April, Goldman Sachs fell down to lows at about $241 and was able to bounce each time off of these two levels of support. What that tells you, in essence, is that buyers are willing to pay for the stock at that price, and so long as that 241 support holds, the stock should bounce and should continue moving higher. But if we look to the end of April, you can see that Goldman Sachs actually drops down below that prior 241 support level. On that drop, we moved down to 225. One of the key elements of technical analysis, I would think TA 101, is that when you break price support, that then becomes price resistance. And I think that's illustrated pretty nicely here on the Goldman Sachs chart. Look at the reaction high after breaking down below 241 in April. We go down to that 225 level, and we have two attempts to get back through 241, both of them failures. You can see that at these two red arrows. So on both attempts to get back through 241, we fail. Price support becomes price resistance at that level. Taking a look at another example, let's take a look at McDonald's. McDonald's, you have a high established, this is in October. We get up to about the $171 level, fall back to 161, and then we come back up in a couple weeks and we go back above that prior high, which was resistance, and that establishes a new support level. Once we go through 171, notice a few days later we come back down, we hit that 171 level, and then we start to move higher. Now, support can be identified in a couple of different ways and really based on different views. But broken resistance can become critical price support, as was illustrated here at the end of October. But also, just recent lows can establish price support as well. So in November, you can see McDonald's had fallen back to about 180, did the same thing just about a week later, and then the very next month came back down to 180, 181 again. 3 separate occasions, all bouncing off of that 180, 181 level. So that established clear support there. Google. Now, when you look from a long-term perspective, you can have long-term price support. So over the course of the entire year of 2018, you can see that Google came down and tested the 1,000 level multiple occasions. February, multiple times in March and April, and then nearly reaching that level again in November of 2018, each time bouncing. The more times a stock falls down to a key support area and bounces, the stronger that support becomes. Also notice that on bounces, Google was finding some resistance up at about 1,190. That occurred in January, it also occurred in June, and each time it did, Google then fell back from that price resistance. That's where sellers line up, and typically we see tops on stocks. The final illustration I have on price support and resistance is with Costco. Costco, as you can see, had a really nice uptrend from April through the first or second week of September. And then each time Costco fell back, it fell back to almost the exact same price level, 217 to 218, and each time bounced back up off of that level. So by reviewing these prior support levels and looking through history, you can establish the key areas of price support where you might want to buy a stock.
Market direction is the single most important thing all investors need to know. Get the advice you need by joining dozens of elite money managers and financial experts, including Steve Forbes, Paul Merriman, Tom McClellan, and Keith Fitzgerald at the Money Show Seattle June 15th and 16th. You'll hear real-time market analysis and learn which stocks, bonds, funds, and commodities you should buy and sell to build a safer, more profitable portfolio. Claim your free pass at seattlemoneyshow.com.
All right, it is now time for our final market update. Looks like the markets are trying to make a turnaround after falling down to test yesterday's close. Dow Jones currently up a little over 102 points, or 0.4%. S&P 500 currently is up 0.42%. NASDAQ made that move earlier, but has been mainly traveling sideways. It is performing very well, up a little over 0.5%. New York Stock Exchange up about 1/3%, trying to get to those intraday highs from earlier. Look at small caps. We've been wanting them to take off, and today they are taking off. Russell 2000 is up almost 1% today. TSX, you can see we had that move to the upside to begin the day, but we're back down to testing yesterday's close for the Canadian markets. Treasury yields are lower, 2.103%. The VIX is falling. We're now looking at a reading of 15.68. UUP, the dollar is up 3 cents, reading 26.18. And gold making a move up, even though the dollar is making its move up. Looks like it might have hit an intraday high, could be pulling back a little, but gold is up. GLD at 126.48. USO, nice big move to the upside this morning, but seeing it pulling back, and it has taken back about half of those gains. It looks like it might be going back toward yesterday's close to close that gap. And TLT is up 30 cents, currently at 130.98. Sector summary currently shows that energy sector is really the one that is enjoying the best rally, up over 1%, but consumer discretionary and communication services aren't too far behind. The only sector in the negative area is the healthcare sector. And that's all I have for our final market update. So let's go ahead and move right on into our momentum sleepers segment. And what we try and do is find stocks that maybe you're seeing some momentum building, maybe some volume is picking up, but it may have been sliding under the radar a little bit. So we're going to look at those ones that are getting ready to turn, that look like they're getting ready to push that momentum envelope. So I'm going to go ahead and, if Mary Ellen, do you mind starting it off with your?
Oh, not at all. Yeah, I'll go ahead and get started. Show you a name. This really caught my eye. This was stock was a big winner back into 2017 and a little bit into 2018. This is MarketWatchers. The ticker is WW. For those of you with MEM Edge, my newsletter, we were participating in this very nice uptrend here, 2017 well into 2018. However, the stock started to break down. They introduced a new product line. They changed their dietary parameters, if you will, and they did not sit well with their clients. So we can see the stock dropping significantly into this year, but it does appear to be attempting to turn. And I'll show you the difference between this. You can see this period back in April where it appeared to be turning. We weren't getting any kind of life or confirmation from the other indicators. This is a weekly price chart, if I didn't mention that. And you can see it's had been deeply oversold, but really that reversal attempt here. Now we are starting to see this RSI climb a bit as the stock is potentially breaking up above that 50-day simple moving average. That's going to need to be your first form of action. And the MACD is lumbering, but we did get that positive black line up through the red. We would like to see it break up above that net neutral 0 to be more constructive. But let's drill down into some other time frames, because a weekly is going to be longer term as far as your outlook as well. So I'm going to pull up a daily price chart, and we are getting a bit more in the way of dynamics with that RSI further to the upside. This is that break up above that 50-day simple moving average. If we can get that 10-day to cross up, we could get that golden cross. And we'd also like to, of course, see this MACD cross up above that net neutral. And then I'm going to just show very quickly an intraday. And here I have a 5 and a 13. These are 1-hour bars. So a 5-hour and a 13-hour simple moving averages. Same principles apply. When you are on the prowl for a turnaround, you want the price to break up above those moving averages in line with that RSI trending upward. And here on the intraday, very short term, we are up above that 0. So near term, super near term, the stock does, this sleeper does appear to be turning. Let's go ahead and take a look at another stock that caught my eye out there as far as having potential, because it had been not doing a whole lot, and while the rest of the group was performing well, but it does seem to potentially be picking up. And this is Square, SQ. And for those of you not familiar, this is a payment processing company in line with PayPal is a competitor. A number of other stocks in this area have really been on a tear. So I've really been on the lookout for this to potentially turn. We want to get back into this period here. Of course, big growth in the middle of last year. And so we are starting to see the stock potentially trying to turn. This is a daily price chart. The stock broke up above this green 10-day, up above the red 50-day. I would need to see a break above this blue 200-day simple moving average. If we can bust above that on any kind of volume, because we are getting the RSI confirming on the upside. We've had that black line up through the red, positive crossover, just poised to turn positive here. So our one missing ingredient would be this break up above resistance here, and we could very well be on our way. The stock has tremendous growth prospects, 62% earnings growth this year, 49% for next year. So keep this one on your radar. Another name that we can take a look at is Kronos. KRO is the ticker symbol. And we can see that this stock is a bit more advanced. I talk about the price needing to be above those simple moving averages. And in this case, we are seeing that with this shorter term green 10-day simple moving average poised. It's crossed up through the red. That's your golden cross. If it crosses up through the 200, even better. This is all with an eye toward pulling these longer term simple moving averages upward. This is a specialty chemical stock. Negative earnings, but for next year, up 34%. So it's truly a turnaround story, and it does appear to have legs because we can see the RSI is positive. MACD had that positive crossover, and it too is now in positive territory. I think I have time for one more. We can take a look at an additional stock here. I'm going to go ahead up here just to get us back to on track. And what we are going to take a look at here is LANC. And this is in that food processing space, which really has been strong for a number of stocks. This is Lancaster. And I'm going to go ahead and pull up a daily price chart on this. That earlier chart was an intraday. So each of these bar, of course, is one day. And we can see another stock that is attempting to reverse their downtrend. And again, it's going to have a little more work to do as far as breaking up above what is now resistance at 159, this 200-day simple moving average, but we can see the RSI is positive. MACD had that positive crossover poised to turn up. So Lancaster could very well be on its way to upside. It's a 1.7% yielder. And those are my momentum sleepers.
Excellent. Those look very interesting.
Mm-hmm.
All right. So where did I start off? As everybody knows, I usually run a scan. My momentum sleeper scan is really, it just is taking stocks that have a decent amount of volume. And then I'm using a faster version of the PMO. These are actually the MACD typical defaults. But I'm looking for something that I want to get a little bit, I want to see the coiling, I guess, of the momentum when I'm looking at a momentum sleeper. And so I find that making them a little faster, it, I don't know, compresses things a little bit, I guess is the best way to put it. So here were the ones that I came up with. And actually, when I ran this scan, and if I run it, I'm sure you'll see that I can get that to go. Oh, I can't get it to go right now, but that's okay. Oh, there they are, scan results. Earlier, I got 70. So I had to go and look at them all in Candle Glance. And these were the ones I picked. I ended up, some of them looked interesting, but the volume wasn't what I liked. Some of them, I just like these best. So here they go. I'm going to start with alarm.com, ALRM. And my momentum sleeping going on here is there you have that PMO that's just turning upward in that nice way. The twitch is what I'm always trying to stay away from. When you get a lot of twitch, that means there's indecision going on there. So to me, if you're getting those nice moves with very little twitch, it's, I don't know, it gives me more confidence in the move. So I think this one has some opportunity. The only issue right now, and it's a sleeper, so we don't know if it's actually going to, come to fruition here, but this is the next area of overhead resistance right up here. But you could even say that this could be a problem, and it lines up almost perfectly with the 200-day EMA. So this is really going to be the moment of truth at 57.50. If you wanted to get in a little bit early, and I think if you look closely, and even in the thumbnail, you can see that right now we're getting a tiny little breakout. So it's giving me some good hope here. And then if you run this line, it looks a lot like an ascending triangle in the very short term. And the expectation is a breakout to the upside there. So I thought that one looked pretty interesting. The next one up is Bloom Energy. And there you go. This is an industrial. This one's certainly beat down. There's your 200-day moving EMA way up there. But looking at it, and I'm going to pull this out a little bit. Look at this declining trend line. This declining trend has been in force for a while, since that top, earlier in May. I want to line this up just right, because it's almost a perfect declining tops trend line. Now, we drifted through it. I don't like to see drift. I like to see a breakout. But now, today's move, we're breaking out. We're getting a move above the 20-day EMA, and look at the PMO again, making that nice little turn. We're getting volume coming in on this little breakout. OBV is also showing all the things I want to see. So Bloom Energy was one. Next up is 21st Century Fox. And this one's just about ready to have the PMO buy signal. It's sort of the same idea, I guess was thinking too, is this declining tops trend line. But notice we haven't actually had that moment of truth like we had on Bloom Energy. And you can see 20-day EMA in the thumbnail is being challenged currently. But we've got the PMO buy signal. We have rising bottoms on the PMO, declining on price. That's a positive divergence. So I think this one could be set up. This might be an early move, like you might be getting this on the, certainly a bit before everybody else if you were to get on board. But, keep that stop rather tight. But I thought Fox looks really interesting. MGM Growth. So we'll look at this run really quickly. But here you've got that rounded bottom. Right now we're on short-term resistance. We need to see the breakout. We haven't seen it yet, but everything's looking good. The PMO, even though price has been mostly trading sideways, is turning back up. I'd look for the breakout above that 20-day EMA, and that would seal it for me. If we get that breakout, I would definitely be giving this one a try. So add to the watch list. All right, office properties. This is another REIT. Same idea, declining tops trend line with a breakout today. PMO is turning up. But this is the kind of twitch I was talking about. This is indecision. However, if you look in the thumbnail here, it is coming on a double bottom. So double bottom on the PMO, not a surprise. You have the double bottom on price. The confirmation line is up here. We haven't actually broken out above that. I think the 20-day EMA will be our first hint. Tri-Point Homes, I think that's the last one. This one I was looking at as a possible ascending triangle. I'm looking at it now. It looks a little bit more of like a symmetrical triangle. Typically continuation patterns, meaning it would continue this downtrend. However, it looks like it's popped up a little bit here into that pattern. The 20-day EMA, that's what I'd be watching. You can see the PMO making that nice move to the upside. Not as impressed with the OBV on this one, but I thought it was certainly worth a look as it's starting to now poke above that 20-day EMA. And those were the momentum sleepers that I had. And here is your summary. And I think we did pretty good here. I think there's some really interesting stocks in there, Mary Ellen.
I know. I definitely worth putting on the watch list for sure.
So let's go ahead. We're going to pull up the poll, but I'm going to go ahead and share the charts first. So I don't think I told my producer that. So, but here we go. Let's just leave it. The poll's here. No, okay. I'll go ahead and share those stocks with you. I just wanted to look quickly at the ones that we had. Of course, I had them all lined up, and now I can't find them. Let me get the chart list. It is the segment charts, and we're going to view them all. So these were the 5 options as for the poll, and the idea was picking the one you think looked the best. I don't know which one you picked, Mary Ellen. I was between Procter & Gamble and Twinkie, Hostess, but I went with Procter & Gamble because it's had the buy signal and it's had the breakout. I think it can go higher. It's been really strong ever since the beginning of 2019. So what was your?
Those were my 2 finalists. I went with Twinkie. I don't know if it's because of their ding dongs or their ho-hos, but realistically it was because of the chart. The stock peaked back in May. They came out with fantastic numbers, record sales to Walmart. They're reinventing their product lines. And so it had that nice pullback, but right now it is seemingly forming the right side of a base and could do well over the near future.
All right. Well, there are the poll results. Wow. Okay. Beyond Meat really surprises me. I guess it's really beat down right now. But that chart, I don't know. I mean, it's been downgraded a number of times. There's just a lot of.
It's actually gone up despite being downgraded. And they kind of downgrade it, but then have a backhanded compliment in their notes. So the hype could last. I don't know. It kind of reminds me of Krispy Kreme when they first came out, Shake Shack.
Right.
The excitement, the exuberance. So it could. We asked over the next 4 weeks. So
that's true.
Yeah.
And wow. So my second choice, your first choice, I can't believe that one's sitting down at the end.
Well, we're going to have to check back in 4 weeks. How about that?
Yes, absolutely. Okay, let's go ahead. I'm going to pull up our market summary and what's going on right now, so we can take a peek at that as we wind this down a little bit. But it's been great. I can't believe it. We had John Murphy on the show, which I absolutely, it's such a treat every time.
Very thrilling.
Yes. I mean, I remember the first time I met him at one of our chart cons, and it was just, I felt like we talk about Tom being a fanboy or fangirl. That's definitely how I was. My first chart con, taking pictures with everybody, because I was just, woo, all these people I've been reading, and here they were all in front of me.
Our geek fandom.
Exactly. That's, when we do those chart cons, that's definitely one of those things that we look forward to every year, or every other year, I have to say, is just hanging out with all our peers, because we're all over the country right now. So you and I think, are the closest.
You're right.
Yeah, in SoCal. Well, here we go. Here's what's been going on with the market. Looks like we're back to trading near the intraday highs for the Dow and the S&P 500. But to me, I don't know about you, this is what's impressing me the most right now, is that Russell 2000.
That's very exciting to me.
Yep. And it looks like we're even challenging those highs we had a couple days ago on Monday and even Tuesday. So that's what we want to see if we're going to get into a true rally that's going to have some staying power. I guess that's the best way to point it out. So there's our upcoming schedule. Again, Mary Ellen, thanks so much for guest hosting with me.
Oh, it's been wonderful.
And I know you're going to be right back with Tom tomorrow on Friday. So I want to thank everybody else for being with us today as well. Please remember to complete that survey as you exit. The link is right there underneath the viewer, because we love to get that feedback. We do air Monday through Friday, noon to 1:30 p.m. Eastern, Monday through Fridays. Have a great afternoon, everybody. We'll see you back tomorrow. Happy trading.